Hey guys, what's up? This is Andrew for TRENDLINES.com. So as usual, I'm here to make some technical analysis and show you all the different tools and techniques that I like to use at work to make money on the markets. And most importantly, I'm here to show you how to do it yourself. So today I'm here to make a big update, guys, on AMC. So let's get into it. Alright guys, so as usual, we start on the 4 hours time frame and let's see what the chart of AMC is telling us. So we had a pretty impressive start of the week. I told you guys that we are in the third wave, that we're gonna see those very strong moves up arriving very soon, and we did. We had, since the beginning of the week, AMC closed at 12 when I did my last video, guys, and I was telling you that the 15 level will be taken this week, and it is now taken back for good, I think. So we took around 40%, guys, 40% in a matter of 2 days. I'm here taking into account the aftermarket. I think AMC closed slightly lower, like 16.4 on the, if I take the daily. The official closing level is 16.4, but in after hours, we went to 17. Why 17, guys? Because you can see here, that's why trend lines for me is the, is my major tool. That's why you can see on my charts, all those lines everywhere. They are basically some levels where I had consolidation or where I had a maximum or a minimum level. Here, 17, guys, it's the highest level we had in the move down that started at 25. All right, we deep down here, came back here. So it was a long time ago, guys, but the market remembers. So now what is interesting to notice is first that this third wave to me might be complete or maybe not. We're going to zoom in. I'm going to do this very soon. So we're going to have more information. All right. I'm going to apply the same method I actually applied here. I told you guys that after this breakout occurred, I was here very bullish. I told you that this was a first wave. Then the second wave corrected a bit more than expected. For those who have watched my previous video, I was telling you, maybe that this, this kind of consolidation here was for me a bit too long in time, but fair enough, it's still valid. And then we started our third wave. And when the volume here arrived, guys, and we took back first the 12th level, this was for me the confirmation that we were actually in this third wave. I'm talking about this blue 5 waves development. So from then I knew that in my third wave, we are going to have 5 waves as well, because guys, this is the principle of Elliott wave theory that is basically telling you that moves up develop in 5 waves, 1, 2, 3, 4, 5, and moves down develop in 3 waves, A, B, C. For those who want to know more about the Elliott wave theory, just click on the link in the description of this video, and you're going to receive a free video where I explain everything, guys, about all these different patterns and how to use them. So here, the information I had the last time I did my video is that we are in the third wave, and that in the third wave, this is the beauty of Elliott. You can apply it, you can zoom in and apply it again, zoom in, apply it again. And we're going to do this very soon. For now, we are on the 4 hours time frame. And here we had 1, 2, 3, 4. And I told you guys the fourth wave, to me, it makes sense that the 12th level would hold. But even if I had some more move down, as long as we were staying above the maximum of wave 1, we don't enter wave 1 territory. So we don't have a diagonal. We having a typical impulse. And this is exactly what we had. And now we are doing the 5th wave. All right. So we are inside the 5th wave of this 5 wave development inside my third wave. And the question we're having is, where is this 5th wave going to go? So to answer that question, let's zoom in and let's see if I'm having 5 waves inside it. This is going to give us some very good hints. And for now, what I'm seeing, guys, in this 5th wave, you see sometimes even the hourly time frame is a bit too long. Let me zoom in on the 30 minutes time frame and analyze a bit what's happening here. So it's a rough guess because here I'm not sure I have a 1, 2 or not, but let's say this is a 1, this is a 2. This is only a 3, guys, because 1, 2, 3, 4, 5. All right, so this is a third wave. So I'm expecting some kind of a correction inside this wave, and maybe 4 and 5. All right, so let's see. We need to know what will happen here. We have different scenarios. All right, so let me here give you the different scenarios and what they would mean. So the first scenario is that this fifth wave is not complete yet, and that we are going to take not only the 15 level back, but the 17 level back as well. This would be a very, very, very good sign. We have already a lot of good signs, guys. So we don't actually need this one, but if we have it, it's kind of the very last one. Look, I told you guys that third waves, they usually take back some important levels. And here we started with taking back the 12 level. All right, it was the maximum that we had here. So it's an important level on the short term. We took it back in the third wave of this third wave. Then we went to the 15 level, got rejected. Fine, no problem. We gathered some strengths. We took some liquidity sitting here. You know, a lot of buyers were actually waiting at a 12 level, and they were right. And they bought massively AMC on Monday morning session, and they pushed the price through the 15 level like very strongly. Let's see. I'm pretty sure we had some reactions here. So if I go on the 5 minutes time frame, let's see how things actually occurred at the 15 level. You see, so we have this. So inside the third of the third of the third, guys. All right. So the most impulsive period we had, which lasts, you know, between 5:30, you know, between those 4 hours, guys. So, you know, it's the most impulsive period of this whole development for now. We still got rejected at the 15 level. All right. We got rejected here exactly 14.6. And then we moved higher and we went to the 17 level very impulsively. So this looks very good to me. Let's go back on the hourly time frame. And now, like I said, we have a few scenarios here. So either we take back this level and this will be the end of this third wave that would be here like this. And we would have the 1, 2, 3, 4, 5 inside the fifth wave, just like we did inside the third wave. Then we would probably correct. So that's why it's important to know where we are going. All right. If we are going, like, for example, I don't know, to the 20 level, it's possible, guys. AMC is on fire, you know, like I said last week, but even more right now. So everything can happen. I'm going to show you very soon the short interest data, the call option data as well, the open interest. And you're going to see, guys, that we have some interesting information on this data as well. So if we go, you know, much higher around the 20 level, this would be very good for the fourth wave correction, because we are going to have a fourth wave. All right. It's going to come soon. So I'm not sure it's going to come this week or early next week. So maybe we're going to push higher the whole week. Maybe we're just going to consolidate around the 17 area. It's very hard to say. And it's not that important, guys. What is important is to know where this fourth wave is going to correct. So if we go around 20, maybe we're only going to correct to the 17 level. But most likely we're going to come back to retest the 15 level, you know, maybe very quickly, but we're going to probably retest it because, you know, on the 4 hours time frame, we took it. All right. It's confirmed. It's very clean. 1, 2 candles, consecutive candles above this level. And usually, guys, like 90% of the time, after we take back some major levels like this, they are retested. So for those who want to buy AMC 15, like exactly 14.7, so let's call it 15, guys, because you never know, sometimes we don't touch it perfectly, is the right level to do so. So my bullish case is we break 17, then we retest only 17 before going higher. My a bit less bullish scenario is that we break 17 and we retest 15. And my kind of bearish case is that we get rejected right away at 17 and we retest either 15, which is the same, or we even retest the 12 level. Is that possible, guys? It's not technically really possible. It's not really possible we go to 12, because this would make my new blue 5-wave development here a diagonal. All right. A diagonal is when wave 4 enters wave 1 territory. So maybe we're going to retest it, but for sure we're not going to go through this. If we do, this means that all I'm saying here is wrong, which definitely is not when you have a look at everything that we said. Third waves are very impulsive and with high volumes and take back some major levels. This is exactly what we're having. So I'm very convinced that this is a third wave, and it's the third wave of a third wave. The blue wave here, guys, is nothing else than a third wave itself. So it's a 1, 2, and this is a 3. So then we're gonna have 4 and 5. Let's see. Okay, so I'm gonna keep this for another video where I'm gonna do some more long-term analysis with you guys. All right, but my blue wave is a third wave itself, so it can't actually correct to 12. Below 12, it's impossible. Otherwise, everything is wrong, like I said, which, you know, may happen, you know, but I really don't believe it. So my preferred scenario, guys, is that we hover around the 17 level, maybe slightly above, maybe slightly below, but ultimately we're going to correct, guys. So don't panic if you see the price action dropping. It is completely normal, just like we had here in this fourth wave. And I told you that AMC dip is nothing, and I'm going to do another video if we drop even by 20%, where I'm going to tell you the same thing. It is completely normal, it is expected. So let's see if we break this 17 level or not. But anyways, guys, this is what will probably play out at the end of this week and at the early beginning of next week. Now, let's go to the financial data together. So I want to show you all the option data as I like to do. So now AMC, guys, is at 17. All right, so it was at 12 before. So before we had around 5% synthetic short interest. Now we are at 17. So we have some gamma here. We go from 5 to 7%. So we have 500 million USD synthetic short exposure on the option market. Mostly coming, guys. So this is, you know, here are the strikes. And like I showed you guys in many of my videos, you know, I compute myself the delta for each of these options. You know, I use this formula here. I use the volatility that I have here. And I use the option open interest that I get from Yahoo Finance. So I compute all this data and I'm able to know what is the synthetic short on AMC and where it's coming from. So here in red, it's my synthetic short. So it's mostly coming from the 10 strike call, but also from the 40 strike call, guys. And we had 17 million shares last Sunday. We are having now almost 20 million shares. So people keep buying this. The volatility here was at 270 and 175. It dropped a little bit. So I'm not sure why it's dropping. You know, it's not what I was expecting here. But it's still very high, guys. You know, dropping from, you know, 270 to 260 is no big deal. And we're still having this very bullish kind of data on this option market. Now, if I want to have a look, guys, at the regular short interest, we're having from the date of the 14th of May that just got released. You know, so this is FINRA reports. So of course, they're not including all the naked shorts. I'm not sure how many of those are, but I'm going to keep an eye on this data that is updated regularly and that is giving us good signals. So here we're having a more short interest. Interesting, guys, you know, so you need AMC to go higher before the hedge funds, you know, increase their shorts position and before you can really have a short squeeze. For now, guys, we are far from a short squeeze. You know, we're having a very bullish development that will keep happening for me. But this is not a short squeeze because to me, the shorts are not big enough. But once again, maybe there are enough naked shorts to short squeeze. But we don't need a short squeeze for AMC to go higher. We just need this price action to keep developing like it is. So if I add to this short interest, which is 21% of the total share float, the 7% that I have here on my option market, guys, this 7% here, then I come up with a total 28% of short interest on AMC. So guys, you know, even if we don't take into account the naked shorts, this is still a lot. And if I take then I can compute the DTC, so monthly and weekly, using the volumes. So the weekly volume is very high. So the DTC is actually quite low, you know, only 1.3. But on the monthly volume are a bit lower. So we are close to 2. So once again, for the shorts to be bought back in panic by hedge funds, we need to be around the 3-5 area. So we are not there yet, but it's getting hot. So yeah, guys, that's it for me. I hope you enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button. So you're going to be the first to know when I upload anything new. And stay close to shore. I see you guys.